Welcome to Finanspanelen, the Finance Panel. This seminar series is a cooperation between the Swedish House of Finance, which is a national financial research center located at the Stockholm School of Economics, and SNS, a leading Swedish think tank. My name is Pehr Wissén, and I will moderate this seminar. And the topic for today is there a need to regulate cryptocurrencies? And there are many opinions on sort of how to answer this question, and to help us guide us through this rather complicated world of cryptocurrencies and decentralized finance, we have Antoinette Schoar from MIT, Massachusetts Institute of Technology in Boston. And she has done research on real data and with sort of scientific models to understand how the decentralized finance world functions. And she will talk about this research and give us an overview over the thoughts behind decentralized finance. And the question we have is there a need to regulate cryptocurrencies? So to speak about regulations in particular, we are very happy to have Martin Flodén here. Martin, I guess you all know him, is Deputy Governor of the Swedish Central Bank, ex-professor of economics from Stockholm University, and involved in the European debate on how to regulate these activities. And last but certainly not least, we have Kristian Gårder, co-head of Equities at SEB, and who is one of the people involved in sort of introducing this in business life in the banking sector. And our audience today are partly in this room, which is at last back in doing physical seminars. It's very nice. And we strongly encourage you to have opinions, ask questions, whatever. Just raise your hand and somebody will give you a microphone. And many more than are sitting here are sitting in front of their screens, watching this online. And you have a Q&A function. Please use it. And we will forward your questions to Antoinette and to our panel members. So this will be done this way, that Antoinette Schoar will start with a 30-minute presentation of her research on decentralized finance. And after that, Martin and Kristian will have 7-ish minutes each for comments. And after that, we have roughly half an hour for a general discussion on these matters. So, Antoinette Schoar, there you are. Very much welcome to Stockholm, although not physical Stockholm. You have our undivided attention for 30 minutes, please. Very much welcome.
Thank you very much for having me. It's a pleasure to be with you, even though it's only virtual. What indeed I wanted to talk to you about today is some work I have done jointly with my co-author Igor Makarov from the LSE on how to think about cryptocurrencies and decentralized finance, this new financial infrastructure, and basically how we should think about the integration and the possible challenges for integration into the traditional financial infrastructure. Let me just say, as a very quick background, and I'm sure many of you are familiar with this, but the blockchain technology really offers a possibility for a completely different financial architecture. This is often called DeFi, decentralized finance, but one should understand that this architecture really turns our traditional system, if you want, upside down in some sense, because it allows record keeping to be decentralized, and access to the system is anonymous and unrestricted. So any party can actually kind of access the system. Advocates of cryptocurrencies argue that this is therefore a way to replace our traditional financial institutions and provide a potential for democratizing finance, because given that access might be much more open, it could level the playing field among providers. And I will come back to this when I talk about, how we normally think about regulation in finance. But I want to make sure, right, that we are all on the same page, that the key building blocks for this new architecture is first this blockchain. So this is, think of it as an open source permissionless ledger that provides for decentralized record keeping. And I'm sure you've all heard of some of the more famous cryptocurrencies like Bitcoin or Ethereum. Now, on these more modern blockchains like Ethereum, not so much Bitcoin, but Ethereum, right? You can actually write smart contracts. So those smart contracts are pieces of code, if you want, that are self-executing algorithms which can be embedded in the blockchain, and they can therefore be run on the blockchain. And those type of smart contracts can adopt many types of functions, but in particular also financial applications. And those are, in some sense, the famous DeFi apps. So these are smart contracts that perform financial service functions, for example, trading or lending or swap contracts, as kind of we have now seen widely being used in DeFi. Now, kind of just to show you this whole thing one more time, kind of to make sure, before I talk about, kind of some of the challenges that come from this architecture, let me show you, visually in a very simplified way, right? What changes when we, if we were to adopt this type of architecture widely. So, this is a, kind of a very banal way of thinking about our, say, traditional financial system, where right at the core are centralized financial institutions like banks, payment systems like PayPal or Visa, MasterCard, or exchanges like NASDAQ, right? And if a customer wants to participate in the traditional financial system, they have to access the system via those centralized financial institutions. And those institutions fulfill a number of functions. First of all, of course, the financial functions that you might be accessing it for, say if you want to trade, kind of on NASDAQ and you're going through your discount broker, right? They provide the financial service. But on top of it, right, they also provide a number of checks, if you want, background checks like anti-money laundering, KYC, know your customer regulation, to make sure that only entities interact in the financial system that we think are not either illegal or accessing the financial system for nefarious reasons, right? Now, in this new proposed decentralized financial system, this turns itself on its head, if you want, because these centralized institutions are now being replaced with algorithms that are embedded on the blockchain, but that can be accessed in an anonymous fashion by anyone who wants to interact on the system, right? And so the challenge then becomes that because we don't have any centralized institutions that could perform KYC or anti-money laundering or any other regulation, right? We have to now either rely on some of these apps or kind of applications to voluntarily engage in this type of, in some of the protections, or we will have to find different solutions. And I will come back to this. But I just want to make sure that when I focus on some of the comments I want to make about regulation, what I see as the core challenge is exactly this permissionless, anonymous access to the system. And the reason why, in our opinion, this is a major challenge for regulators is that inherently, if you think about financial systems, we have seen that there are many forces within in financial services that actually, inherently lead to a push for concentration. And in particular, right, I will talk about some of the economic forces behind finance in general, and those type of economic forces also affect DeFi applications. And in particular, I want to focus on data privacy and transparency, how in DeFi we might think about the economic rents that we often are very concerned about, kind of that they're accumulating in financial systems, how transaction costs are affected in DeFi, implications for governance, and then finally systemic risk. And then at the end, hopefully, or maybe we leave it to the discussion, kind of some of the possible solutions for these regulatory challenges. So let me start with data privacy, right? As I already said, traditional intermediaries are tasked typically to solve a trade-off for society between protecting individual privacies of customers that want to interact in the financial system, right? So we don't want your bank account or your bank to make your financial transactions somehow available on the web, or kind of share with parties that are not supposed to have access to them, right? But we also have societal goals of preventing money laundering, tax evasion, terrorists to access our financial system, right? We've seen in the current environment that the fact that we can regulate the access to the financial system also, kind of has political implications, right? So these trade-offs are inherent in the financial system when we think about transparency and privacy. And most societies, if you think about it, have solved them by trying to regulate financial institutions in a way that when the need for accessing finance outweighs the protection of individual privacies, we want to have the opportunity to access this data, right? Because if you think about it, if this whole game of DeFi is just about complete anonymity, we don't need DeFi for this, right? We can go back to an old, I don't know, let me call it Swiss financial system, where you can anonymously open bank accounts without ever showing who you are, right? That would provide complete privacy as well, but obviously most societies don't want this. And so, this is, in my mind, right, why having a system of decentralized finance that builds on a permissionless blockchain to ensure privacy by not collecting any personal information really creates massive challenges for regulators, right? Because basically it means that there is no central record keeper who could help with KYC checks or even help customers with tax enforcement, and that creates externalities for the rest of society, right? Externalities in keeping the society safe, but also externalities that if we allow one part of the financial system to not guard the access to the system or to allow tax evasion, right? That, because protection of data is expensive, that creates a massive subsidy for this part of the financial system, right? And so in general, right, the concern here is that then allowing this part, if this DeFi part of finance became larger and larger and also became more integrated with the traditional financial system, it would provide more opportunities for evading taxes, AML, KYC norms, and of course it would then also worsens our ability to prevent things like bribes, maybe even political bribes, use of ransomware and other malfeasance. I will come back, so to me, this is really one of the core problems that is being, kind of that ensues from this proposed infrastructure. And that, in a way, I will show you at the end, I think one could actually regulate without impeding the other potentially beneficial aspects of decentralized finance. All right. So let me come now to a second dimension of financial intermediation that we are typically quite concerned about in financial systems, and that's, you know, how are economic rents shared within the financial system. And of course, right, there has been a lot of debate whether our financial system actually provides, you know, kind of the right trade-off of services to the public and amassing, say, fees and rents at the level of the financial intermediaries. And this is, in some sense, often the narrative that you hear from supporters of DeFi and cryptocurrencies. What I mean is that, you know, kind of this idea that just because we are changing the architecture so that, you know, kind of there is permissionless access to the blockchain, and that anyone might be able to set up a DeFi app, say on the Ethereum platform, that this free access in itself would actually allow for a democratization of finance or a leveling of the playing field. But, you know, kind of as a student, as a researcher in finance for a long time, right, we are all aware that this is actually a quite limited, if not even naive view of financial markets, because a lot of research in finance has shown us, right, that there are many inherent economic constraints to competition in financial markets that limit the effectiveness of free entry. So free entry by itself will not reduce the risk. And the reason, of course, here is that we've seen that in financial markets, network externalities, economies of scale and scope, the role of reputation, right, provides actually incumbents or often, you know, kind of the largest players in the financial system an advantage that is not just, say, eroded or equalized through free entry. And those exact forces, however, will be at play in the DeFi architecture as well. So, for example, in this work that we have done, we kind of show more detailed examples of this, but we actually can show you that at every level of the DeFi architecture, we already start seeing some of these rent accumulation at play. So, for example, if you think about the level of validators in Bitcoin, they often are also called miners, that are validating transactions on the blockchain, you can already see that they have built-in incentives to be concentrated, because basically the economic of mining or validating, right, pushes for more concentration. But the more concentration there is on the blockchain, the higher also is the possibility of collusion among these entities. And then obviously, if there is collusion, there is then even the potential for an attack on the blockchain itself, basically, an attack on the integrity of the transactions that are being stored on the blockchain, and then it could lead to double spending by the collusive party, etc. Now, it is not just at the level of validators. In fact, even at the level of the smart contract platform themselves, there are strong network externalities which then limit competition. So we already have seen that, that a lot of apps, for example, are being built on a few platforms because right now, right, that's where most of the developers are. This is also where most of the customers are. And you have basically those economies of scale and scope operating at the level of smart contract platforms. So in other words, it's difficult for even apps to switch away from certain platforms once those platforms have become big. But once they're big, right, then obviously there is also an inherent threat that rents and prices will go up on these platforms. And remember, if we actually don't have a way of even knowing who these intermediaries are, we can't even as a society then start, regulating any type of price decisions that are being taken at the level of the app. And then finally, let me say, even at the level of individual DeFi applications, we are seeing benefits from scale economics, economies that then might lead to monopoly power, exactly as we normally are concerned with traditional financial intermediaries. And again, it's the same financial logic, if you want, that one certain type of DeFi apps might become very big and have the deepest liquidity, then again, it's difficult for other providers or customers to switch away from them. Now, so all these, if you want, built-in economic forces that push for, that typically push the financial system to more concentration are exactly at play in the DeFi environment or architecture as well. And I want to make one final point here, which is there's also been a lot of work, in traditional financial system that shows that sometimes, in fact, maybe more often than we would like, anti-competitive behavior can also arise in situations where customers lack financial literacy in shopping effectively between different type of providers. So even if the inherent financial, say, system or the set of financial service companies is not at all, say, concentrated or monopolized, we have seen actually that it is possible for financially less, astute or literate customers to actually end up with bad contracts and, say, bad credit card contracts, bad insurance contracts. There's been a lot of work on this, because those financially less literate customers might fall for types of contracts that are disadvantageous to themselves because they just don't understand the true costs embedded in these contracts. And here again, there's a lot of work in behavioral economics by people, say, like David Leibson and Garbex and, Heithaus and Kosegi and other people, Malmendier and Tate, that have literally shown that competition doesn't actually work at that level, because if the customer doesn't know what to shop for, then basically competitive forces don't get you to a first best or even second best outcome, And so those are exactly the places where in our traditional financial system, we impose consumer financial protection, and we're trying to regulate how more informed financial parties, like financial intermediaries, should interact with the wider public. And you see again, that in a world where I don't even know as a regulator who is the offerer of a DeFi app and who interacts with this, because everything goes through via smart contracts, those type of protections are very difficult to build in. In fact, the smart contracts that are embedded in the blockchain make it even worse to provide financial protection for consumers, because the contract will always execute on the blockchain, even if it's a contract that might, take advantage of a customer. And so at the very best, one would ex post have to somehow claw back rents from whoever the counterparty on the other side is, if we were to decide, that somehow a contract was fraudulently set up, So these are really very complicated issues that financial regulators will have to tackle if we were to allow this architecture to stay anonymous and permissionless. All right, let me be quick in the rest of my 5 minutes. I also just want to point out one other benefit that is often proposed in financial, DeFi and the cryptocurrency environment, is that it is a way to lower transaction costs for participants. And participants point out that, which is absolutely right, that centralized intermediaries can have limited incentives to invest in new technologies, in welfare improving innovations, that benefit maybe the public, but not necessarily benefit the rents of the centralized intermediaries. And in my view, it is true that blockchain technology has the potential to reduce some of these costs, especially around issues of, say, automatic clearance, settlement, immediate settlement of transactions on the blockchain. But I also again want to point out, right, these type of incentives to avoid the adoption of new technologies that might be inherent in our traditional financial system, exactly those forces are also at play in cryptocurrencies. So we have even seen already in, say the Bitcoin environment, that a lot of, that for example, miners have tried to resist the upgrading of the mining technology, which would have reduced the cost to consumers, because it would reduce the returns on their own past investments. So Bitcoin is a great example of it. Or if you think about Ethereum, Vitalik Buterin has done, if you want, like a huge amount of work in trying to move Ethereum from being, well, hopefully they will, right, from a proof of work to a proof of stake type of environment. And so you see, again, right, the known financial forces that typically impede some of the benefits from, say, new technology adoption that we criticize in the traditional financial system, is not automatically solved by DeFi. And in my view, right, how do we typically solve this in finance? We try to basically regulate, to give incentives, even for dominant players to move to new technologies. All right, I think I'm severely out of time, so let me just finally say, the anonymous nature and the decentralized nature of DeFi applications are also proving actually to have implications for the governance of these type of entities, or if you want, the type of applications that are offering decentralized financial applications on the blockchain. And some of you might have followed this, but there's now a lot of experimentation with basically on-chain decentralized governance for decentralized autonomous organizations that are building DeFi apps on DeFi platforms. And in a nutshell, what we basically are seeing is that all the problems that, several decades of governance research in finance have shown are now being rediscovered exactly on DeFi. And when I say this, is basically that minority shareholder protection of shareholders typically relies on a legal environment and a legal infrastructure that allows us to hold managers and also hold majority shareholders accountable if they are engaging in behavior that violates the fiduciary duty vis-a-vis their minority shareholders, right? And so this type of government and legal protection obviously is not available if you're trying to be completely decentralized and anonymous. And so what's happening right now in many DAOs is that large stakeholders or large owners are dominating the voting behavior, and that you see kind of the coordination failure because these decentralized small investors or minority shareholders are either trying to free ride on larger stakeholders and often find themselves basically at the losing end. All right, so let me skip the one point here and just finish by saying what I wanted to show you highlight in this talk is that basically many of the key challenges for DeFi regulation stem from this anonymous open access nature of the system. And the reason that this provides such a kind of challenge for the financial system is that they are typically, right, we rely on legal enforcement and regulatory solutions to make sure that unwanted parties and unwanted behavior gets regulated in the financial system. So I want to close by saying, in my mind, one of the most pressing regulatory challenges is how to solve this, basically to solve the problem that is provided by the anonymity of the system. Because if we want regulatory oversight, but at the same time, if we want to kind of protect the possibility of having a blockchain that allows for open access and some of the benefits, kind of that might be embedded in the system. My proposal, and my proposal with my co-author Igor Makarov, is basically that an ideal level of regulation would happen at the level of validators and developers which control the network protocol. Because if regulators could cooperate and maybe regulate these type of validators, to make sure that they not only are verifying transactions on the blockchain, but that they are also verifying that the parties that are engaged in these transactions are basically parties that have been cleared from a perspective of KYC, anti-money laundering, anti-terrorism rules, then we would actually be able to build a blockchain environment where clean parties can all freely interact with each other, but we're making sure that unwanted participants or illegal participants don't have access to the system. And it would allow us to protect actually the financial system, and at the same time preserve many of the benefits of kind of that the blockchain might offer. So let me stop here so that kind of I allow my my fellow speakers to take the stage.
Thank you very much. That was amazing. And Martin, continue on the regulatory
yes
topic.
Thank you, Pehr, and thank you, Antoinette, for a very useful discussion, a presentation about this crypto landscape and many of the problems that we are struggling with in the Riksbank and in international fora, I would say. So the Riksbank obviously is not a regulator. So we will not, our ambition is not to regulate crypto. But I think it's obvious that there is a need for regulation here, and there is quite a bit happening at the international level. The European Commission, for example, in Europe is having a proposal for European regulation, to the extent that there will be specific Swedish regulation that is up to the Swedish Financial Supervisor, Finansinspektionen, or possibly the Swedish government. But I will get back a little bit to the role of Riksbank and other international organizations here. I also want to comment on the title of this session. So, is there a need to regulate cryptocurrencies, was the title. I broadened this a little bit. I would have preferred to say regulate crypto finance or just crypto. I think cryptocurrency, there are no cryptocurrencies in my world, but there could potentially be. A cryptocurrency is a crypto asset that is used widely for payments as a store of value and most importantly as a unit of account. And I think there are no such assets today. If there were, that would be problematic. But crypto finance, even without cryptocurrencies, also come with a number of potential risks. I also think to answer the question that Pehr asked for the session here, I think we can rephrase the question. Is there a need to regulate and supervise financial markets? Is there a need to regulate and supervise payments instruments, and payments infrastructures and market infrastructures more broadly? Should we have the same risk and same activity regulated in the same way? And do we need central banks that conduct monetary policy, that is, that have control over a unit of account, etc.? So obviously, I think the question is yes to the first three boxes here. For a central banker, I think the question is, the answer is yes also for the final one about the need for central banks, although I know there are some other opinions which partly motivated the issuance of Bitcoin, etc. So why do we say yes to these questions? Why do we need regulation, etc.? I think Antoinette did a very good job in covering most of this. It's consumer protection, it's criminal activities, anti-money laundering, counter-terrorism finance, know your customer regulation, etc. We need that. We need to regulate governance of the financial markets. That's partly related to consumer protection, obviously. We also need resilience, robust systems, etc. And we need, I think, regulation for everyone everyone wouldn't internalize all the potential risks if we didn't regulate this. It's the environment question, in particular with the proof of work validation process. For the central bank, what we are mostly interested in and why we followed this intensively, the developments and the regulatory initiatives, is partly because of the risks to financial stability. If there is interconnectedness, traditional finance being more and more exposed to the risks in the crypto finance landscape, or if the crypto finance landscape becomes more important for funding real economy activities, etc. And also, as I indicated already, as a central bank, to conduct monetary policy to stabilize the value of the currency and also to stabilize economic activity, we need to have control over the money that is used, the unit of account, money supply, basically. So if we do transactions, use another unit of account than the one that we control, that's the problem. It's a problem if it's the US dollar, it's a problem if it's the Bitcoin. So it doesn't really matter if it's a cryptocurrency or another currency. So what are the particular concerns, the most important concerns in the crypto landscape that we see? Well, when it comes to crypto assets that are not backed by something else, and this is what we typically think of, the most exposures from the economy is to unbacked crypto assets, such as the Bitcoin in particular, and Ether, also quite large exposures. It's, I think, consumer protection, etc. And that's not really the main focus of interest for the Riksbank, and also the energy use and environmental impact. I think stable coins is more interesting and potentially more useful, but also more risky for financial stability. So stable coins today, the values outstanding are quite a bit smaller than for the unbacked crypto assets. It's roughly 10% of the value of crypto assets, but it's growing much more rapidly. So the numbers I've seen is that the outstanding value grew by a factor of 5 last year. So clearly, if this continues, the values outstanding today are roughly $200 billion US, I think. It would quickly become very large. Stable coins are more useful for payments, and they are very important for payments and settlement in the crypto landscape. They are almost exclusively backed by or denominated in US dollars. They are similar to bank deposits, but constructed roughly as money market funds. So they come with all the problems of poorly regulated money market funds, with the risk of liquidity problems and the run leading to fire sales, etc. That actually, because these stable coins are backed by real economy assets, like to some extent by actually fiat money, but bonds, etc. could lead to problems on the funding markets where these bonds are issued, if there is a run. And then we also talk about DeFi applications. They are also relatively small today and mostly used for financial activities within the crypto landscape so far, but they are also growing very quickly. The value in these systems, the typical measure is called total value locked, grew by a factor 10 last year, according to numbers that I've seen. So it's also very rapidly expanding, and it comes with a number of problems that Antoinette described very well. There are governance problems. It's not really decentralized, although it's called decentralized, but it's almost unavoidable that you have to have some centralization to get some governance, etc. Can be a lot of leverage in many of these products. So when it comes to regulation then, what is happening and what should be done? I don't really have the answer here, but I know there's a lot of activity going on at the international level. I mentioned the European Union level with the Commission's initiative. The proposal is called MiCA, Markets in Crypto Assets, that takes some steps to regulate the markets here, the issuers of stable coins in particular, wallet providers and other service providers. So the approach here in MiCA is rather different from Antoinette's suggested approach. I don't think they at all try to get to the validators, as far as I understand. In the US, there has been a recent proposal from what's called the President's Working Group, which was a collaboration between a number of different US authorities about how to regulate stable coins in particular. And their proposal is to have a very strict regulation of issuers of stable coins, so that they basically have to be banks, more precisely narrow banks with deposit insurance, etc., and strictly regulated. And there is a number of other organizations working on this, like the Financial Stability Board, the Basel Committee, where I'm a member, is thinking about how to regulate banks' exposures to crypto assets. CPMI and IOSCO about payments and securities markets, etc. So what should we aim for? So this is my view and not necessarily all these organizations. Well, I think it's necessary to have activities with the same risk and same activity should be regulated in a similar way. So far, the crypto landscape is relatively limited and small, but it's growing so rapidly, and it will take time to get these new regulations in place. So it's even if it's small today, I think it's important that we work actively and try to get something working soon when it comes to regulation. We should still promote innovation and competition, but we should make sure that we do not get new units of account. We don't want to have cryptocurrencies. Then we lose control of monetary policy, etc. But there are a number of problems here when it comes to actually getting good regulation. By definition, almost, these activities are borderless, often non-tangible. It's not clear where they are located, which jurisdiction do we talk about. Is there even a legal entity to regulate, or is this just a software code floating around on the blockchain somewhere? Is it possible to regulate this, and how do we enforce regulation? So I think the different routes here, one possibility is to ensure that crypto remains small and separate from the traditional financial system. This is basically the Chinese approach, trying to forbid everything. We could try to regulate stablecoin issuers as banks. This is the US planned approach, I think. Or what I think is most feasible is try to regulate the on-off ramps into and out of crypto. So we have to for this to be useful, we have to be able to convert money to crypto assets and get it back, or to use it for payments, etc. And that's probably where we can regulate. So it's to some extent about regulating the banks, make sure that they still do not get too much exposure to the problematic parts of crypto without forbidding everything, because I think there are a number of good innovations here that will make the markets more efficient. But it's still a little bit unclear to me what could be done and precisely how to do it. And maybe Kristian knows more about this, that has more practical experiences, I think, from this. But that was my final point for now, at least. So, thank you.
So now we're waiting for Kristian.
Cryptocurrencies and digital assets has the potential to fundamentally change what we do, that's for sure. And we see quite a few opportunities around that. And I have 2 slides for that, slightly complicated ones, and you can group it down to 3 categories, and Antoinette and Martin already mentioned them, but basically, just to set the scene, so the crypto community as such, they normally refer to us banks as traditional finance to the left there, or TradFi in short. As a side point, it's actually the same word as in Swedish called tradig, which I will try not to be, but that's basically boring and simple-minded. But so I'll do my best not to be that. But the thing is that if you take in the middle then, so that's us on the left, the normal bank, that's CFI. And CFI, that's the service providers that act as gateways, the on and off ramps, as Martin mentioned, to the blockchain. And they're normally then set into the centralized finance. That's why it's called CFI then. And even if why they're called centralized is the fact that from a customer perspective, you then rely on one party to bring you onto the blockchain. They normally handle your private keys and so on. But the actual underlying crypto that you might buy is obviously decentralized. So finally then, CFI was born out of DeFi, which is to the right, and that's the decentralized group. And that's a movement that started quite recently, like 3-4 years ago, I would say, or with actually a little bit earlier with the smart contracts of Ethereum. And that stands obviously then for decentralized finance, and that takes the aim of cutting out the centralized actors in full. So the achievement by running those services without a dependency on a legal entity. So they're very difficult to regulate as they run on the decentralized network, and they are smart contracts, and the actual logic is within that smart contract. And that is processing the transaction itself. And when I looked this morning, for example, if you deposit your money through one of those services, it currently pays around 17% interest rate or so on crypto assets. But also on the stable coins like UST, it had quite a significant interest rate, which kind of indicates that there are quite some high risks involved in that. But with that said, my point is that TradFi, or the traditional finance, the services you build into DeFi are actually the same that bank has been provided for quite some time. So it's both lending, access to capital market, raising capital, collateral management, and so on. And that's been under heavy regulatory scrutiny for quite some time. And that protects the customers and obviously builds trust. So CFI has started to become regulated. So if you take the middle group there, and as Martin already mentioned, I mean, if you take Finansinspektionen in Sweden, they are under the same AML rules, and they have a couple of investigations going, which is very good. And I think the participants in Sweden are collaborating with that, so hopefully that will go well, which is a very good sign. DeFi, on the other hand, on the right, is, as Antoinette already mentioned, much more complicated, primarily because it's hard to identify the legal entity behind providing those services, as it runs on the distributed network as smart contracts. However, the regulators in the US are working on that, and they want to regulate that, obviously. An SEC opened last year, I believe it was in August, an investigation on Uniswap that I saw you had on your slide as well. And they're one of the providers for those smart contracts. And it appears like it's actually enough if you market and if you provide the on-ramp and off-ramp for those smart contracts to become regulated. So basically, if you do marketing of a service, even if you don't control the smart contract, you will still then be able to regulate those vendors or those actors. So now to my point. From an SEB perspective, the services provided by actors in the CeFi and DeFi space resembles very much the services that we as a banking sector already provides and have done so for many, many years. So the difference between CeFi and DeFi then is that the services provided are supposed to be much more efficient, which we can agree on, and also that they, to a large extent, actually is in the unregulated space. And that is a bit more problematic, as that in itself attracts a lot of customer activity. And at least that argument quite often comes up as the main argument to go into DeFi as an advantage. And as Antoinette, as you mentioned in one of your papers I read last night, if you can hide your capital gains obligations by using DeFi services, that obviously will save you from a lot of tax, in particular in jurisdictions that don't have wrappers like we have in Sweden, and like kapitalförsäkring and so on. But that creates huge subsidy for the cryptos, and that also fuels the interest for those kind of services. So we believe that the worlds of TradFi, CeFi, and DeFi, I love the words, will converge in the next 5 to 10 years as they become more and more regulated. And we as a bank definitely need to keep up with the competition, and it already creates quite a lot of stress in the bank, which is probably good from a competition point of view, that we need to expand our services and really make them available on those new platforms, which is good in itself. So the future for CeFi and DeFi, when that becomes regulated, which I strongly believe it will, it hopefully, I mean, from a bank perspective, will give us a competitive advantage. Obviously, we do have a large customer base, but we also have spent quite a lot of time and have competence around how to provision services in a heavily regulated environment. And the banks know what it takes to do that. With that said, there are lots of new players as well that are coming from the bank industry, and that's an excellent job doing that. So from a development point of view, I would say the future very much depends on how the sector will be regulated. And we see, and I personally have a worry that there is a great risk that the Nordic and also the European financial markets will fall behind and lose our relative competitive advantage if our regulators in Europe don't then catch up with the pace of the rest of the world. So I think that's an important part to be said. So with that said, so what we do on the near term, so I mean, as I write here, the cryptocurrencies are still in rapid development, and based on the risk, we have a cautious stand, in particular when it comes to, we obviously don't want to have anything to do with money laundering and all that. On the other hand, there are more and more tools that we could use to prevent that by limiting the customers, how they use their wallets and so on. And we actually prepared a couple of services that we decided not to go to market with, but that we might change. When it comes to CBDCs, a central bank issued digital currency and also stable coins, we find them very, very interesting as they could really make our underlying infrastructure more efficient, and it creates new possibilities. So we have quite a few initiatives around that. Been liaising around the Econo project with the Riksbank and so on, even if that focuses more towards retail and maybe less about the wholesale, which I find more interesting. Tokenized assets very much resembles what we already do, so around the securities front. So, and that is a very natural extension of what we currently do and what we will continue to do. And I think the intersection between, I don't know if you can see those, the little picture in the top, but the digital assets, the CBDC and stablecoins, and cryptocurrencies to basically issue bonds on, for example, a public blockchain, together with a token-based Swedish krona, for example, or a dollar for that sake, and make it available on, for example, a public blockchain which will require cryptocurrencies at least to pay for the actual transaction cost, is a very interesting area, and we are working on, together with one large client, to issue such a digital bond, most likely in Swedish kroner or maybe Norwegian kroners. And our approach is to have a stepwise approach. So our initial focus, even if crypto is the most mature one, we decided to still focus on digital assets. And the offerings in scope is actually the classic banking offering that we have already, in that advisory, issuance, the primary market, so issuing a bond, provide secondary market on that bond, so trading, on execution on that, and custody. And it becomes quite complicated if you use a public blockchain and you still want to have whitelisting of what wallet that could actually buy this bond, primarily to keep control of who can hold that bond and so on, that we work with. And also from a cost perspective, I think we're spending 50% of the budget or so on regulatory advice. And as there is no Swedish regulatory framework that we could use, we look at Luxembourg law right now for that. So that was hopefully 7 minutes or thereabouts.
Okay, thank you very much.
Thank you.
Martin, could you please also step up on the stage? So while the audience here at their computers prepare questions, comments, whatever, I would like to give the panel a chance to comment on each other. Antoinette, did you have any comments on what you heard from your fellow panelists?
No, I think these are very thoughtful comments, and I agree with the broad gist of what's being said. I think I also want to say, maybe kind of the one thing I want to say is that I probably see a bit more urgency in regulating this space now, because I think that beneficial innovations, especially of players that are a bit more in the traditional space, will depend on giving the private sector a guardrail and guidance of how regulation will evolve. Otherwise, many players are actually, in the US you see it, right? Many traditional firms, from PayPal to banks, are in a way waiting for the regulator to tell them how the space will be regulated, so that they can then think about how to invest in these new innovations. And the other reason is that, we know that, again, economies of scale and network externalities are so important in financial markets. If we allow this part of decentralized finance to grow without any regulation, it might be at some point we are back in a world where it's too big to regulate, and then it will become very painful. I also want to say, it will actually, for an uninformed electorate and uninformed consumers, if you try to regulate after the point, and then of course the value of some cryptocurrencies will go down, the regulator will be blamed for reducing the value of that thing, when in fact before the value was based on doing tax arbitrage and maybe regulatory arbitrage. And so then it becomes actually particularly difficult to regulate. So we need to be mindful, kind of that political dynamic as well. And I know you guys are in Sweden, where government functions like a charm, but outside of Sweden, these considerations actually are much, much more considerable, I would say.
Thank you. Martin, any comments?
Well, a comment on this is just that I fully agree. So I should have stressed that more, the urgency here. So I think in Europe maybe we are waiting for MiCA to come into force. It will take a number of years, is my understanding, before it is in place. And when it is, I should say I'm not at all an expert on MiCA, but I think my view is, at least my preliminary view, is that it will not go all the way, and it will definitely not go all the way to where we are 3-4 years from now, when it possibly comes into force. So I agree, something has to be done more quickly. And I hope that is possible, but I don't really know who will do it. I think from the Basel Committee perspective, I think there's quite a bit of hope that there are already guidelines out, and I think there will be a bit more clarity. But that's directed to the traditional financial actors, the banks in particular, and the recommendation already is that they have to be very cautious with getting exposures to crypto, in particular to unbacked crypto assets. But we have to also address the crypto landscape more directly.
Martin or Antoinette, are these sectors growing more or less at the same rate in Europe and the US? Or so just from reading newspapers, it sounds like much more is happening in the US, but do we have statistics on that?
No, so data is definitely a problem here. There is a lot of data, things are public, etc. You can monitor things, but you don't really know who is doing what, and it's kind of tricky in that dimension. We don't really know. But I saw another survey actually that indicated that there are more exposures growing in Europe than in the US. I'm not sure that's right, but I think it's definitely happening both in Europe and in the US.
Antoinette, you have lots of experience reading this tricky data.
Yeah.
What's your comment on where the growth is happening?
So I agree with the comment that it's very difficult to know exactly. I think on the consumer side, though, so let me say this: if you look at consumers going through centralized crypto exchanges, we do see that they have grown in Europe a lot too. So they've grown in the US with, especially with offerings by Coinbase, Gemini, Kraken, but then those type of exchanges are also very active in Europe, and they're European exchanges. On DeFi, it's tougher to know because kind of as both of you my co-panelists have said, right, we just don't know where people are accessing from. And then, kind of the other thing I would say, though, is, in some of my work that we have done, we have seen that, there's also a lot of activity in Asia. And the reason we know, in particular in China, right, so we know that a lot of mining capacity used to be in China until the middle of last year when Chinese government cracked down. This actually we were able to trace on the blockchain. In fact, there's even still a lot of mining capacity in China because the local governments seem to not want to crack down the same way the central government in China wants. But some of that has moved. But you can see, for example, that a lot of what used to be volume on Chinese exchanges when the Chinese government basically forced a shutdown in 2017, a lot of this volume seems to have moved to applications like Tether, basically stablecoin applications. And so it is very likely that, especially Chinese customers and in Asia, people in Asia are also using cryptocurrencies a lot.
So if we don't know where the action is, that creates a strong case for global regulation, doesn't it? Will that happen, Martin?
Well, global is never really global, so that's the problem. So even if we agree, say the FSB or G20 countries could agree, how do we regulate an activity based? Well, maybe we don't even know where it's based, but the Cayman Islands or just on the blockchain somewhere. So I think it's important with international cooperation here, but we cannot wait for everyone to agree. So I think it's important that we move ahead, but inform everyone about what's happening in different parts of the world. But
it sounds like the case is very strong for global regulations.
Yes, if it was possible, yes, definitely.
Of course, Kristian?
No, I agree. I mean, it's interesting when we look at from an institutional point of view. The interest in Sweden has been very, very low, primarily driven by lack of regulation. So I think the Swedish institutions, including hedge funds, have actually not shown a very big interest of it, which is a bit surprising. When I was in London 2-3 weeks ago, it's like an explosion of interest in crypto as a diversification and so on. So I very much agree with what was said, and also you wrote in one of your papers, Antoinette, that it's important to regulate before it becomes too big for it to become very difficult to regulate, because if you then ban it, it will obviously create a lot big losses. Most likely the value will go down significantly, and that in itself will be highly political. And also when it comes to retail in Sweden, it's quite fascinating. When I read, I think Sweden is probably maybe not significantly bigger than other countries, but roughly 2% of the Swedish population or thereabouts have bought crypto, which is still quite a lot of people, right? So I think it's important from a protection point of view to get that regulation in place quite quickly. Yeah. While still not limiting the innovation all the blockchain technology is creating. So it's a fine act of balancing that, actually.
Okay, thank you. We have a first question from the audience and a second one coming up. Yes, please.
Yeah, thank you. My name is Erika Eliasson. I'm the chairwoman of Swedish FinTech Association and also member of the House of Finance Advisory Board. So I'm very happy to be here. I have one question. I think I agree with Martin that we should rephrase the question. Maybe it's not if we need to regulate, it's how we should regulate. Because I think that's, even for the fintech sector, it's absolutely crucial that we get some clear regulations in place quite soon. And I also think it would be quite interesting if we could move backwards and listen to a discussion about internet, maybe in the beginning of the 90s. Maybe we should have the same concerns with the internet as well. It's global, it's very difficult to regulate, and it's anonymous. And now we know that it's not so easy to be anonymous on the internet. It's quite the opposite. So, and with blockchain, we can see a lot more in the transaction monitoring than in traditional finance, for example. But Swedish FinTech, we published a report today, actually, the FinTech report for 2022. And in that we can see that the FinTech companies in Sweden thinks that the regulatory burden is increasing, of course, and that's how it should be, probably. But what do you think, well, how could the FinTech say, because I think we all agree on in Sweden that we want to have a thorough, a strong FinTech sector going forward. How can the FinTech sector and the regulators and the traditional finance industry work together? Because it quite obviously the cryptocurrency community, that it's here to stay. And how can we regulate that and how can we work together in moving forward?
That's a good question. Martin? Or
maybe Kristian is
Kristian.
in a better position to answer that, I think.
I think, I mean, for example, the Avanza partnership with Safello is a great example of that, actually, where they have the customer base, they've done the KYC on that customer base and work with, provide the classical banking part of it, and then you have someone like, in that case, Safello, that actually has been very innovative on providing services around buying crypto. So I think most likely we will see more of those kind of partnerships. That's my guess. And I think it's a bit sad that it has not happened earlier, because in some respect you left retail to figure it out by themselves with all the risks involved in doing that. So I think, that's my short answer.
But it sounded like you also wanted more dialogue around the future regulations. And
yeah, it's quite a polarized question, I would say, about crypto. It's quite polarized. It's a little bit you're against or with against or for when it's here to stay, and you just need how do we do the best of it.
No, I agree, and I think to us at least, if I talk from an SB perspective, we had quite a lot of plans on products and services we could provide, but we are kind of stuck waiting for clearer regulation, because we don't. I mean, it's a trust business. We definitely do not want to do anything that could be considered wrong. So that's why we're taking the safe bet of actually not coming to market with those services. But so I think it's a collaboration with the regulators, and I think that even if it is been very much binary, as you already mentioned, that you're for or against, I think that is changing quite quickly now, when the institutions get the more interest. So I think from a Swedish perspective, at least from SEB, one of the issues we have had is that if there's not a very clear customer demand, we will not prioritize it. And from an institutional point of view, there's been very little customer demand, which is a little bit surprising.
Well, I don't really know the answer to this, but one thought I have is at least that so the Riksbank, we are trying to facilitate competition and for the infrastructure to be open, and we will in May we will launch the TIPS platform, so that's the European platform for instant payments. I don't think there will be much activity initially on the platform, but there is quite a lot of potential for that platform to actually for fintechs to develop new products. It will not really be an e-krona, but this is kind of a step into facilitating settlement in central bank, not necessarily really something close to central bank money at least, and exactly how fintechs could exploit that platform, I don't know, but I think there is plenty of scope for innovation there for new products in the payments landscape and related to crypto finance more broadly.
Okay, we have 5 more minutes, and I have one question here in the room, and we have one question from cyberspace. So start with the room. We take them both, and then you sort of answer them in the last minute, please.
Okay, my name is Bertil Karlsson. I'm sitting here listening. So it seems that there is a consent that we need to regulate it, but at the same time, you just honestly say it's probably not possible due to its global nature. So do we need to have an alternative strategy? If you can't regulate it, what will we do?
Okay. Nina?
It's not a short question, I understand that.
A question is short, but answers are sometimes not so short. Please.
Yeah, we do have a question here from Adrian Davarnas. As mentioned by Martin, one of the threats of crypto is to lose the unique unit of account. Does the Riksbank or other central banks see that threat as important? As regulating crypto beyond on-off ramps seems very difficult, what are the steps that central banks could take to diffuse that risk?
That was for Martin.
Yes. Well, I think it would be very problematic if we lost the unit of account unintentionally. Of course, we could lose it in a sense if we choose to join the euro, but that is a choice in that case. I don't see it as a very acute risk. We are not close to this happening. But for this not to happen, we, the Riksbank, we have to do our job. We have to provide a payment system that is both safe and efficient. And for example, to continue to develop the infrastructure, like the TIPS project, as I mentioned, but also to conduct a monetary policy that generates a stable value of the Swedish krona. So for example, the Bitcoin with all the price volatility, I don't see that as being ever close to a competitor to the Swedish krona. But more potential threat, in addition to the existing currencies like the euro and the US dollar, are stable coins that would most probably be based on the US dollar. And if that developed into something that is broadly used for payments, and when we start to think in terms of that stable coin of US dollars and get our salaries paid in stable coins, that would be really problematic for Swedish monetary policy. I don't think it will happen in the near future, but it's something that we have to monitor, obviously.
And the second question in 2 minutes, how do you regulate in a globalized world where... Yeah.
No, but I can try to answer that one.
Oh, yeah.
It's
Martin, you're off the hook.
Or, yes, or maybe Antoinette.
Even better.
No, go on.
You probably have a better answer. But no, but I think, I mean, if the question is, can we wait for it to happen? I don't think that's very wise either. And our approach has been to prepare ourselves to offer services, even if they're not regulated, that still fulfill the requirements for us as a bank around AML. But that limits the actual possibilities of what you can offer. For example, we could offer, without regulation, the ability for our customer base to invest in Bitcoin by limiting, having a wallet for them where they don't control the private key, they cannot send it anywhere except between the community of customers that we already have within our bank or potentially the Nordic banks. So there are things like that you could do. On the other hand, people don't really want it as a mean of payment, at least not to my knowledge. It's an investment and more speculative nature, and maybe the inflation hedge and all that. And then there are actually ways to come to market with a product like that if we would like to. But so far we have been quite worried about the fact that very few people actually understands the risks associated with it. So we therefore decided to not offer that to retail for that reason, actually. And if there would be a big interest from institutions, then we would, with professional counterparts, most likely do that. And that's what we're looking at right now.
Okay, Martin, you have a very small comment, or
no? So maybe Antoinette wants to.
Yeah, Antoinette, please. You get the last word, please.
Maybe to the first question, because I'm not qualified to talk to the second question when there's a central banker in the room. But I think the global nature. I honestly think that if we want to preserve, and that's a big if, right? Society needs to decide this. But if we want to preserve an opportunity to have DeFi apps on decentralized cryptocurrency platforms, we do have to figure out how to do identity verification in a safe and, in some sense, if you want, on the platform, anonymized way. And I think actually in general, this came up maybe in some of the questions, but tokenization of IDs and how to protect tokenized IDs, and then allowing financial institutions to actually share these tokenized IDs could be in general beneficial for our financial system, because right now every financial institution where you set up a new account needs to do your ID verification again. So your information sits in many different places and therefore is actually potentially at risk. And so if we could actually have a better infrastructure around this, I believe that this would allow us to think about a better regulation and in a way a safer provision of a decentralized crypto platform. And if large countries, like, it doesn't even have the whole global world, right? If the US and Europe were willing to collaborate on a regulatory framework, this could be in a way have enough economies of scope already so that other countries might want to either join our blockchain if you want, or could then decide to set up a different one.
Antoinette, thank you very much. We have slightly run out of time. Antoinette Schoar, Martin Flodén, Kristian Gårder, thank you very much for joining us. And thank you for the discussion with an applause while we are in the same room. We can do that. Thank you very much.
Thank you.